Three companies, $3 trillion valuations, but one seismic question. Will the liquidity squeeze from the IPOs crash the stock and crypto markets? Well, SpaceX went live on Friday, while OpenAI and Anthropic are lining up for the most expensive stock market debut in history. Combined, the valuations total roughly $3.6 trillion, equal to France's entire GDP. Well, on Friday, SpaceX went live, raising $75 billion at $135 per share, which we just already told you, which is at an evaluation of $1.75 trillion, and that is the largest IPO ever recorded. The bulls point to a cushion. An estimated $8 trillion sits in U.S. money market funds. SpaceX's $75 billion raise is barely 1% of that. Institutional investors have spent years buying Nvidia and Microsoft as AI proxies. Now they get the real thing, and demand is expected to explode. But SpaceX, combined with OpenAI and Anthropic fundraising, is estimated to attract over $240 billion by the year end. And that will potentially drag liquidity from technology stocks, AI investments, and digital assets. Crypto is already bleeding. Bitcoin is down roughly 33% this year, with over $1 trillion wiped out from its market value since hitting a record high in October last year. Crypto ETF outflows have reached $3.1 billion year to date as investors shift money towards AI stocks and upcoming listings. A BNP Paribas note projected up to $50 billion in retail liquidations across crypto, semiconductors and leveraged ETFs just to fund the SpaceX allocation alone. Historically, only 40% of IPOs outperform the S&P 500 in their first year. The median one-year return versus the index is minus 12.5%. The signal is clear. This isn't a crash trigger, it's a liquidity rotation. So in the short term, everything outside these three big IPO names faces pressure.